We all know that the past 12 months were understandably extraordinary due to the COVID-19 pandemic, which has caused significant harm to humanity and disrupted life globally. It has been a tragedy for all of us, families, businesses, and economies, and has in effect fully tested our resilience and drive to keep going as we would have under normal circumstances. For businesses like ours, when the pandemic hit East Africa around this time last year, focus immediately shifted to not only pursuing business goals, but to also guaranteeing the safety and well-being of our staff, customers, shareholders, families, and other stakeholders from the effects of the pandemic. We did this by incorporating containment measures as directed by the governments and health authorities in all the countries where we have a presence. As a significant player in the banking industry, we believe that our responsibilities go beyond banking, and we are committed to contributing to addressing socioeconomic challenges across the markets in which we operate. During this period, when the pandemic has affected global economies and brought the stark reality of the balance between life and livelihoods, we are playing our role to cushion our credit customers through various initiatives, among them restructuring of loans. KCB has not been immune to the impact of this pandemic. As you see from the financials, the containment measures rolled out by government dampened economic activities and disrupted international trade and supply chains. The impact on the financial sector has been significant and will continue to reverberate for a considerable period ahead. Amidst the challenges, we look back and take great pride in the outstanding support to our stakeholders and, importantly, the resilience of our balance sheet and diversity of our various revenue streams, which have helped us withstand the COVID-19 shocks. To cushion the business, we have been implementing business continuity plans and undertaken business modeling with a worst-case scenario in mind. We continue to relook at these frameworks to prepare the business for the extremely adverse circumstances to the benefit of our customers and shareholders, also bearing in mind the strategic and systemically important role that we play in the financial services arena in the region. We have continued to grow as a regional bank. During the year under review, we leveraged on market expansion strategies to increase our subsidiaries' market share to become the top tier and deepen our market share to sustain our position as a leading lender in Eastern Africa. We deployed a twin strategy of strengthening the domestic subsidiaries in Kenya, whilst pursuing aggressive expansion in the existing markets across the region. In November 2020, the group announced and signed a definitive agreement with Atlas Mara Limited, a sub-Saharan African financial services group, for acquisition of a 62% stake in Bank Populaire de Rwanda PLC and a 100% stake in the African Banking Corporation Tanzania Limited. The acquisitions will increase the brand's footprint while reinforcing market capabilities. We expect the two transactions to close by the close of the second quarter with significant bottom line contribution before year end. The pandemic has presented a unique challenge for the board, especially in playing its oversight role to help business navigate the current crisis and push forward into recovery. Demands on management have become greater with the crisis, and it has become harder for leaders to execute their role, raising the need for greater oversight and direction by the board at group and subsidiary levels. To our shareholders, we appreciate that throughout the crisis, you have stood with us and believed in the ability of the business to remain resilient, consistently maximize shareholder value, and provide an unmatched return on investment. I am delighted to announce that, subject to regulatory and shareholder approval, and based on the financial results to be revealed shortly, your board proposes to pay a dividend of Kenya shillings 1 for every share issued. Looking forward, following a better understanding of the COVID-19 pandemic, the containment measures undertaken, and the rollout of vaccines, we believe our economies will begin to recover. We can already see green shoots and remain cautiously optimistic for a brighter outlook. The Group CEO will provide more insights into financial results shortly, but suffice to say that the business was resilient given the operating environment, an indication that the group has strong fundamentals to get through the period. I would like to conclude by thanking our staff for their continued dedication to our businesses during a difficult and unprecedented period. Nothing says more about our people's commitment than the way our staff have turned up and kept the doors open throughout the period to ensure our customers continue accessing our products and services almost seamlessly despite the changed working conditions. Finally, the results we announced today would not have been possible without our staff. The board would therefore like to salute them. Thank you very much.